Okay, welcome everyone. Kevin Andrews on a Monday morning, showing you a live trade with the New Zealand yen, going over some of the 915 strategy information. We are taking a look at the week. We can see that we are at the high of the week. I'm going to show a orange line that you see here. That's the high of the week. It actually matches up to a low of the about 2 months ago. And now I'm going to go down to the daily. And based off of the daily, we're at the high. We haven't broken a previous high of this candle, but we have broken this high, this low right here. So that's 81.75 up to 82.25 is about 50 points. So the market was playing around in that 50-point zone between 81.75 to 82.25. The market has tried to make a high for today. What I'm looking for now is for what are you doing or what have you done in the last few sessions. So we can see that Friday into the weekend, market ended on a down note on Friday. Sunday, Monday begins. You can see that the market actually has everyone trapped down here. All the sellers are trapped down here. So they took it long from 81 up to 82. That's 100 points. We're typically looking for 75 points for the market to move or a break of a high. All right, that's 81.75. It breaks this high right here. Let's put a little mark. And now we're looking for, once the market has gotten a break of the high, they have triggered traders to go long. Now, typically within 25 to 50 points of that break is what we're looking for, some type of negative formation, selling, or something to basically show that the market is ready to turn. So here's the break of the high, 81.75. That's 25 points up to 82. Just comes short of 50, roughly about 81.15, so about 40 points above the break. But let's look at the time so we know what the prices we're working with. The market opened up down here at the end of Friday, pushed up a little bit. They pushed up people up in Asia, pulled back a little bit, pushed up in Europe. So they have Asia and Europe both long at this point in time. So once the market came to the end of Europe at the top here, right at 82, that little push up there and a fail at 15 is actually really important, because I know that everyone in Asia, everyone in Europe, they're all long. So there is nothing but stops and liquidity down here for the market to go back to. Based off of that, let's go down to a 1 minute and you can see the formation better. There's the break at 82. There's a push, push, push and fail. They have three pushes right here in these boxes. That's the end time right here in the gap where that red circle is on the top. That's the gap push. That means that the European session was over. They got the market to go long for one last hurrah. And now we can see that they're rolling it over. So once they did this formation and it failed here, let me zoom in again so you can see it. Once they pushed up, once the market session ended it for Europe, they pushed the market up again, try to aim for 25. Right here, they pumped and failed. Maybe you're thinking, okay, I'll wait for a pullback and I'll go long right here. You go long and the market turns and fails. That's a confirmation. But what I was waiting for was 1, 2, 3 pushes, pull back, and a retest. That retest right here is the safest place to get in, above 82, going short. They just got everyone to go long above 82, and they just hit all the stops on the downside going down. Here's another. Here we go. If you didn't get in, it's another confirmation. So these are all confirmations. You can see the pump up, pull back. You can get in here, push down, push back into the peaks, and get in here. It could push down, get back. You could have got in here. And that is how you live trade the 915.